Clara Hermit and welcome to the Halloween edition of Breaking the Mould with investment director, or perhaps more Dracula today, Russ Mould. Russ, how are you?
I'm very well, Pumpkin. How are you?
Not too bad. I'm quite a
very colourful. I like
colourful
it.
Pumpkin.
Yeah,
Thanks. Not looking too bad yourself.
That's all right. Try and keep in trim. I mean, I'm a rich vein of form at the moment.
Yeah, I think you should keep the cloak as well.
Oh, thank you.
Russ, what's the fuss?
The fuss in the next couple of weeks is all going to be about food retailing, the sector that's probably given investors the most and worst nightmares over the last 12 months. We've got figures coming up from three heavyweights in the next fortnight. That's going to be the fuss. Figures from Marks and Spencer's, Sainsbury's and Morrisons. All
three of them been absolutely frightful performers, haven't they? So are there any little rays of hope that investors should be looking out for?
Well, I mean, in the end, Marks, let's start with them, because they've got the numbers up first on the 5th of November, fireworks night. Not expecting too many from these figures, probably. And they've actually been incredibly quiet since their July trading statement. In fact, the only news since then has been the departure of Finance Director Alan Stewart, who's hopped from frying pan to fire and joined Tesco's, and he's going to be a busy chap there, I'm sure. But other than that, the first quarter is the last thing we've got to go on, where food was good, up 1.7% like-for-like. Great effort in the carnage that's besetting food retail overall. The problems there were with clothing and with general merchandise, and the latter wasn't helped by the, shall we be polite and say, sticky start that was enjoyed by the new M&S.com website.
Okay, so we'll be looking out for all of these trends in the
All
interim.
of those three, particularly general merchandise, that's had 12 consecutive quarters of sliding sales. And Bolland is really under pressure to stop the rot there. I'm not saying it's going to be easy. I think people will be looking for improved performance from the online side as well after that sticky start. But it isn't going to be easy because Next and others have already said, unseasonably warm autumn, it's actually made life quite tricky. And if you just look down the high street, you can see most of the big names are on sale already. It's not even November yet. So it is tough out there. So people will be looking at the top line. They'll also be looking at margin. Mark Bolland, M&S's CEO, did talk proudly about strong, full-price sales for women's clothing in the first quarter. Possibly not pumpkin outfits, but you never know. So if he's been able to maintain that, margin should be quite good. That's the other thing analysts will be focusing on. For the full year, one thing Bolland has got in his favour, expectations are low. People are looking for, the market is looking for sales up 3%, profits up 3%, and a flat dividend at 17 pence.
So Marks and Spencer's have been doing really well with their food sales.
They have.
But our other two Halloween ghouls, not so great.
No, not so tasty, not even for vampires, I'm afraid to say. And if we move on to Morrison, we've got numbers the day after Marks and Sparks on the 6th. Yeah, I mean, that is actually the third worst performer in the FTSE 100 over the last 12 months. Only Tesco's and Tullow Oil have done worse. But again, at least like Marks, low expectations give Dalton Phillips, the boss, a bit of a base to work from.
Yeah, it's a good job, isn't it? Because the interims were awful, weren't they?
Adult 18 only certificate stuff, I think it's fair to say. First half sales down 7.4%, pre-tax profits down by a third. The boss Phillips has responded with a $1 billion 3-year self-help programme, but as we've discussed here before, albeit when dressed slightly differently, they've been slow in convenience, they've been slow in online, they're struggling to catch up there, and they are caught in this dreadful contest between the big chains and the heavy discounters and the price war that's resulted. It is making life very, very tricky for Morris. The one thing that will probably interest the market is the valuation. Yes, the company's got 2.6 billion of debt, that's actually coming down, and a market cap of 3.5 billion. Add those together, you get what's known as the enterprise value, or total cost of buying the company, of 6.1 billion. Now that compares to annual sales of about 17 billion and property in fixed assets of 8 at book value. They're the sort of figures that tend to get vampires, private equity buyers, predators and other assorted people quite interested in possibly launching a bid. Now Morrison's, they'll probably wait for the Christmas numbers, which will be truly decisive, but if the share price keeps going below £1.50p, wouldn't be shocked if somebody had a little nibble at one stage.
So that just leaves us with Sainsbury's.
Yes, and I don't think there'll be a silver bullet for their problems on the 12th of November either when they announce interims. Boss Mike Coop, relatively new after Justin King's long tenure, faces the same challenges as Bolland and Phillips, particularly in food. Price discounting, price discounting. He described in the Q2 trading statement to the end of October, Coop said that business conditions represented a perfect storm. Like-for-likes were down 0.8% overall, despite a 17% jump in convenience, 7% in online. So again, I don't think these numbers are going to be brilliant, but again, it's the fourth worst performer in the FTSE 100. Expectations are low. The market's looking for flat sales, profits down 16%, and one or two analysts have even looked at the dividend and wondered whether it might be cut. It was 17.3p at Sainsbury's for the full year last year. The interim dividend last year was 5 pence. Keep an eye on that.
Okay, thanks, Russ. Now, before we go anywhere, as it is Halloween, I need to hear your
My
your
evil laugh. I'm too nice a guy for that, but shall I try?
Let's try. Yep, definitely more Santa Claus.
Yeah, sorry about that.
We'll be back with you very soon indeed. Happy Halloween. Enjoy yourselves. Take care.
Right, time for a bite then.